Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. As you can see, the downside had been given a testing throughout July and August. But the low water mark of the 18th of August was pivotal to the construction of what happened next, as the market failed to break down through the neckline, currently 816, with a big old 50% Fibonacci line of the October 2021 to January 22 move, spinning on its own axis with a pipe bottom and subsequently moving higher. At the time, I suspected the next significant event would be in the second week of September, when the then declining short-medium moving average, currently 887, was to impinge upon the market. Well, for about a week, this moving average tried to cap the market, but it all ended in failure, as 2 weeks ago the market broke higher. In all this time, since late August, the market had been constructing a new pattern, a bull channel, currently 914 to 980. This was easy enough to do once over the short medium moving average, as there was a limited free zone above all the way up to the July 2012 high at 957. However, this week we have reached that 957 area, and now there might be issues. You see, 957 is the gateway to congestion above between 957 and 1001, within which sits the flatlining long moving average, currently 975. A lot of this congestion was made up from 2011 and 2012 and was easily breached on the way up in February and on the way down in June. However, all those times they did not have the additional reinforcement of the long moving average, and it is this long moving average with the upper bull channel line that is constraining the market this week. Two final points. Firstly, creeping in from above, we have the medium moving average, currently 999. Well, I had to double check there, but it's true, which is providing additional reinforcement and resistance. Secondly, and somewhat surprisingly, we have a possible weekly key reversal here this week. If we close over 934 or under 929, then we'd be on. Right now we are looking at a weekly key reversal up. Minneapolis wheat. This market has been sideways to lower channeling market over July and August, and not as exciting as earlier in the summer. Well, 2 weeks ago we saw the start of possibly another pattern being constructed. This pattern seems to have been prompted by the approach at a steep angle from above of the short medium moving average, currently 919. And rather than acting as a cap on any rise, it instead seemingly triggered a move higher, such that this week prices overcame the 50% Fibonacci line of the August 20 to May 2022 move at 956, and have been testing the combination of the November 2012 high and the 50% Fibonacci line of December 2020 to May 22 move, both at 974, as well as the September 2012 high at 986. There is now the rudimentary construction over the last 3 weeks of a possible bull channel come ascending expanding wedge pattern. That's currently 930 to 989. The reason I say rudimentary is not only because it is rudimentary, but also because this market is way behind Chicago and Kansas City wheat in its construction of such a potentially bullish pattern. You only need to look at where the flatlining long moving average, currently 1034, and the declining medium moving average, currently 1039, are above the market and their distance from this current market to appreciate how backwards are the actions here. We even have the possibility of a dead cross of these two moving averages, more so than Chicago seemingly had. I guess this market is a wait and see situation. I'm watching whether this potential bull channel come ascending expanding wedge pattern develops further. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZE Tofpik and ADM Investor Services International Limited. And here comes the final bit.